So really, record keeping can be the first step to really tax planning, tax savings, and avoiding headaches with the IRS down the line.
Hi, I'm Bette Hochberger, CPA, CGMA. This channel aims to educate you on tax, tech, crypto, and finance-related news. Come learn how to grow and keep your wealth.
We're going to talk a little bit about how do we get into tax planning. Well, the best way to start tax planning, honestly, is to start keeping good records. And that may sound like you're not really doing anything, but you are. Because if you think about it, a lot of times people ask me like, oh, how do I lower my taxes? Well, are you taking all the expenses you can take and that you have spent money on? So again, we talked about tax evasion before. We're not making up expenses, right? That's not what we're doing. We're actually keeping track of things that we are spending already. So if you have a business, hopefully you're using a business credit card or you're using a business bank account for all your purchases, right? And if you're not, or if you're a sole proprietor, or you're worried about your personal taxes and can you itemize or not, you're still going to need to keep track of expenses, right? It's really going to help you preparing your tax return, and it's going to help you see where you're spending your money, and then you can identify what you can use to write off against your taxes. Now, another reason this is really helpful to keep track of these expenses and have good record keeping is in the event the IRS comes and they say, hey, prove that this is real. Prove you really spent money on it. Like, this looks a little fishy to us. Or, hey, maybe you're just unlucky and you got pulled for an audit, right? The IRS is going to look for documentation. So if you have that documentation, then it's very easy to justify why you deducted it. Corollary to that is even if you spent the money and you don't have the documentation and maybe it was a legit expense but you didn't keep a receipt, the IRS can come back and say, well, we don't care, you don't have a receipt, you can't prove it, and we're going to disallow it, and now you're paying more taxes. So really, record keeping can be the first step to really tax planning, tax savings, and avoiding headaches with the IRS down the line, right? So things that are really important to keep track of also are all of those 1099s and W-2s and all those annoying tax documents that get sent your way and those letters from the IRS, things like that. All super, super important. In the past couple of years, we had those child tax credit things and the stimulus payments and all that stuff. There were so many letters that the IRS sent or maybe didn't send. People were trying to find them, and a lot of times it did impact their taxes because maybe they missed getting some of those stimulus payments, and the only way to make it up was to claim it on your tax return. So if you didn't have those documents, or you didn't go and grab those documents from the IRS, from your IRS account, then you were missing out, right? You're missing out on a lot of dollars that other people got. Other things that are really important, property records, right? If you're buying, selling property, if you're paying your property taxes, things like that, super important to keep track of those records. You're going to need them at some point. Obviously, we talked about the expense side. The income side is important too, believe it or not. If you're in a business that gets 1099s, life's a little bit easier because the people that are paying you are going to report it on the 1099s, but not everybody gets 1099s, and you're going to have to show your income, because what you don't want to do is have the IRS come in and audit you, because when they do that, they look at your bank account and they say, all these deposits, we're going to count them all as income unless you can prove otherwise. So it's good to keep good records. It really is. It's not just an annoying accountant thing. It's to help with the annoying IRS things that come up along the way. And one other one that's pretty good, health insurance. It's so flippin' expensive for so many people, and it affects your taxes in so many ways. If you're an S corporation owner, you need to put your health insurance, if it applies, the situation applies to you, on your W-2. And if you're getting credits, premium credits, you need to keep those 1095s. There's so many documents, tax documents related to health insurance. You might as well keep everything. It could be a big a tax swing if you can take advantage of those deductions or not. So that's it for me today. Good tax planning. You got to start with the good record keeping and just cover your butt in case the IRS comes along.
Thank you for sticking around. I hope you learned something new. Please leave a comment, like, and subscribe to my channel if you want to continue improving your tax and financial literacy. Bye.